What's the hidden turning point in an IRS civil audit that can turn it criminal? Well, if your audit suddenly feels different, if the tone shifts, if the questions become more intent-focused, you may be closer to criminal tax exposure than you realize. There is an ongoing internal IRS procedural pivot that's taking place that most taxpayers have never heard about. What's even scarier is their representatives are clueless. The IRS is involving fraud enforcement advisors in civil audits, and when that happens, your case may no longer be just straight civil. Today I'm going to explain what that means, what signals to watch out for, and most importantly, how to protect yourself. So what's a fraud enforcement advisor? A fraud enforcement advisor, or FEA, is not just another IRS employee. They are specially trained to develop criminal tax cases out of civil audits. Their job is to assist civil auditors in identifying and developing potential tax fraud indicators. They don't prosecute. They do not conduct criminal tax investigations directly, but they are the bridge between the civil side of the IRS and the criminal side. Their goal is to do a criminal tax referral to the IRS Criminal Investigation Division. This bridge is where most cases change direction. And most taxpayers and less enlightened trained representatives don't even know is happening. So how does an FEA involvement change an audit? Once a fraud enforcement advisor becomes involved, the audit slows down. Questions become more precise, and they become more focused on your intent. Any explanations given are tested for consistency. The auditor begins asking questions about who prepared this return? Why were these aggressive positions taken? What did you understand at the time you signed this return? They're going to be looking at internal records or internal communication. They're no longer just verifying numbers. They are evaluating your mindset regarding your tax filings. If you get that mess out of this video, remember, criminal tax cases are about criminal intent, not simple math. And FEA involvement often signals that the IRS is evaluating your willfulness. This is the only element of a tax crime that can give the government a tiny challenge in criminally prosecuting. So, what are the escalation patterns that people miss, including their representatives? Well, here's what frequently happens. A taxpayer and their representative believe they're in a routine civil audit. They over-explain. They provide unnecessary documents. The taxpayer lets their CPA, EA, or CTEC certified preparer communicate freely with very little involvement. Emails are exchanged, drafts are reviewed, narratives are created. Meanwhile, behind the scenes, the IRS is clandestinely building a criminal tax referral file. If fraud indicators are confirmed, the auditor will suddenly suspend the civil audit and refer the case over to the Criminal Investigation Division. Those folks have a 90% conviction rate if they take up your case. And once that fraud referral happens, voluntary disclosure options evaporate. Your exposure changes and the stakes increase exponentially. So what are the common tax fraud badges the IRS is looking for? Fraud enforcement advisors help identify badges of fraud. Badges of fraud include keeping two sets of books, the destruction or alteration of records, the consistent underreporting of income, not enough income reported, too many deductions claimed, false statements that are made to an auditor that they can prove, the use of nominee or shell entities to hide income, lifestyle inconsistent with reported income, offshore taxable income concealment patterns. Individually, all of these factors may look explainable. Together, they create a criminal intent narrative. And this narrative is what prosecutors use to convince a jury beyond a reasonable doubt that you acted willfully in cheating. Here's the big problem, the communication trap. Here's where many taxpayers and their clueless representatives make a fatal set of mistakes. They continue communicating casually, missing the subtle clues that the audit has turned dangerous. They assume cooperation alone, business as usual, will protect their client. Taxpayers allow CPAs, EAs, and CTEC certifieds to respond. This creates unprivileged written records that can later be subpoenaed. Listen, accountant and preparer communications are not protected, not in the way that attorney-client communications and work product are. If your case escalates criminally, these emails and drafts become evidence. That's how civil audits become criminal tax cases. So how should you go about managing this risk? Well, first of all, communications must change immediately. You need controlled communication, strategic document production, risk assessment, and possibly reconstructive accounting under attorney-client privilege. You need legal oversight of accounting and tax position analysis. This is not about hiding information. It's about protecting your rights while responding to civil and potential criminal tax exposure properly. A dual-licensed tax attorney and CPA, such as myself, will evaluate both the numbers and the underlying criminal tax risk. Listen, my education and combination of credentials matters most when criminal tax escalation signal appears. I am specifically trained to deal with this. So in closing, do not ignore the signals if your audit feels different, if questions you're shifting toward potential criminal tax intent, if the IRS seems unusually focused on testing your verbal explanations. Whatever you do, don't ignore these signals. Early intervention with the correct representative, that's the most important part, prevents criminal tax escalation. But once a criminal referral occurs, your options evaporate. If you believe your audit may involve fraud risks, contact the tax law offices of David W. Klossing at 800-681-1295 or visit klossing-associates.com to schedule a confidential reduced-rate initial consultation today. Timing matters. Strategy matters. Most importantly, attorney-client and work product privileges matter. Most importantly, to date, we have never had a tax audit client criminally prosecuted for tax crimes, and plenty have had exposure. Thank you so much. Dave Klossing, tax attorney, CPA.